I'm Asif Farouk and this is Finextra at Sibos. We're joined here today by Jonathan Williams of Experian. Thank you for joining us. So firstly, I want to ask you, what are some of the key payments topics?
So, like many other conferences, there are two key things which payment institutions and banks are really concerned about at the moment: standards and regulation. And I think coming out of some of the other sessions, there have been also some warnings for the banks on what they might need to go and do, action they might need to take to protect themselves in the future. First, I mean, it's interesting that the Standards Forum has now been around for 10 years, and it's very good to see the industry celebrating those people who have been helping us keep doing business over the last 10 years or so, and certainly the last 40 years since the SWIFT standards originally born in 1973. However, one of the other key topics in the standards area is the ISO 20022. It seems to be everywhere. It's talking about in payments and securities. In summary, if you had to boil it down to one sentence, I'd say ISO 20022 is coming, look busy.
How do you think the discussion around regulation has changed over the last few years, especially at Sibos?
So, interestingly, there have been lots of discussions around regulation on liquidity and so on, similar to previous Siboses. But actually, it wasn't a regulation session. I found some of the more key messages for the regulation side. I was at a session last night with Leo Lippis and Mary-Ann Francis from Wipro, and they were presenting the findings of a NACHA report to the Global Payments Forum. What was interesting is the amount of regulation which is affecting payment systems worldwide. One of the key things I took away from that was, of the 16 faster payments schemes which operate worldwide, pretty much all of them were actually initiated through regulation. Only two that Leo could think of, Sweden and Poland, were actually based on a business case. Now that's rather concerning, because certainly if you're an external observer to the payments industry, you might think we're engaged in some Pavlovian experiment with the politicians to get them to actually regulate us. We reward them, we do what they want when they regulate us, and we don't do what they want when they don't. So I think there's a real concern that we actually get driven by those political ends. But actually the most concerning thing out of that session were some of the questions from the floor. We were getting questions from bankers saying, well, we're not interested in the payment initiation part, we're only interested in the balance. If we hold the balance at the end of the day, surely that's good enough, surely we'll make some money from that. And the problem with that is I think that banks will get increasingly commoditized in terms of the price of their payments, and the actual customer service, the real value, will be delivered by those organizations which are providing the payment initiation. So those new incumbents, those mobile payment providers, they're actually doing what those customers want.
And what effect could that have?
Well, I think we're already seeing some of those effects in the new forthcoming proposals for the Payment Services Directive version 2, the daughter or son of the Payment Services Directive in the EU, which regulates payments institutions. And one of the key things is that that's now extending out to third-party providers who actually don't operate the bank account. They merely help consumers or businesses initiate those payments through some easier-to-use interface. And the real concern is that if banks don't take control of payment initiation, they may well lose a large part of the business and certainly a large amount of the revenue. So that's a real concern.
And lastly, what can banks do to defend their position?
Well, I think banks need to focus on what they're very good at, which is clearing and settlement, but they need to make sure that every time one of their customers initiates a payment, they do absolutely whatever they can to make it as easy and reliable as possible. And we talk about straight-through processing, but in reality, it's just passing data through systems. What real straight-through processing is end-to-end, making sure that when your customer initiates a payment, you know and can give them confidence that that payment is going to reach its destination. And things like, for example, the migration across to SEPA are going to actually highlight this quite considerably. Any business that's done a simple conversion of their data across for SEPA, across the IBAN format, probably hasn't done much validation. And that account data could be really out of date. If those payments then fail, who is that corporate customer going to blame? They're certainly not going to blame the bank. They're certainly not going to blame themselves. They're not going to blame the customer. They probably will blame, however, the SEPA project in itself. And that may have significant impact on how they make payments in the future.